Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the weekly recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. These videos take time to make. Not this week. This week's going to be pretty short. But yeah, these videos take a lot of time to make. So this is how you learn. If you want to understand the mindset and understand the trades, these are what you need to watch, the recaps, because that's where you find what I'm thinking and what I'm looking at and stuff like that. So the week wasn't that great. I know I had 3 weeks in a row of 88%, which is very, very bizarre. But obviously this week I did not get 88%. I had 9 wins and 5 losses for a win rate of 64.29%. Probably one of the, probably not the lowest, but one of the lowest win rate percentages I've had in a very, very long time. And it's because of a few things. One is I didn't trade that much at all. I mean, if I traded more, I probably could have got my numbers up more. I probably could have got 80%, but I didn't. Being a short week, I know that short weeks, I don't do too well on them for some reason. I don't know why that is. I just don't. And with that said, that I went and played small all week long. And the only day I actually played normally with size was FOMC day. So that just those FOMC days when Powell's not speaking ends up being big runners, and it was a good day. So, but also Thanksgiving was on Thursday. We had half a day on Friday, so basically we only had 3.5 trading days, and I didn't get that many trades in. So that definitely played into it, because normally I'm trading like 25 to 30 times, and I traded half that. So but anyways, enough with that. We'll get into the trades. Monday the 21st, I took let's see, I had 5 trades, 4 winners and 1 loss. Trade ideas room on the 21st, I said 21st I did not put anything down. Why did I not put anything down on the 21st? Make sure I get the dates right. Yeah, the 21st is Monday. Why didn't I put anything down? Oh yeah, I wasn't there Monday morning. That's right. I had a my citizenship. I was late. That's why I didn't have anything there. So I did take SPX puts at 10:07, which is right here. As you can see, it popped up. You get this big nasty red candle, and then it was a fake out, popped a higher day, and it faked out there too. So a double fake out. Looked like it was gonna dump, then it looked like it was gonna pop, then it faked out. Then when it came back down, this is where I took the 3940 puts at 770, and they went from 770 to 1070. That little drop right there. I gotta switch over to the hourly on this one. So got a nice little play out of that. Then I took puts again at 1131, which is right here. Popped up to VWAP, 20 EMA. Whenever they're together, you have all these moving averages together. They act as a good support and resistance. Because right here you have the 20 EMA, 37, which is the white line, blue line is 20, and the VWAP, which is the white dash. They're all clustered together. And 37 EMA, I don't really pay much attention to. It used to back years ago. It provided more support and resistance, but lately it gets ignored, so I don't really pay attention to it. I just keep it there just for directional purposes, I guess. So I'm so used to seeing it, I don't even bother taking it off. But the 20 VWAP, 200 PDC, which is previous day's close, is the most important. So when it did reject off the VWAP 20 EMA, that's where I grabbed 3940 puts again at 850, which I got right here underneath the 393.60 area, 65 area, right below these candles right here. And they went from 850 to 1380 on that pop right there, on that dump I should say. Then I switched to calls at 1153, which is right here. Trying to look at, yeah, I grabbed it right. You get the dump right here and it got bought up. I remember buying it when it dumped and came back up. Bought it about 11.53, so I probably bought it more or less down here. The 39.50 calls I got at $7 and went from 7 to 9 up to 20 EMA and VWAP. 11.53, so that was, yeah, that was in this candle. I probably got it down in here. So 7 to 9, $2 play. That's a good play. You can't, you get to stick to taking base hits. You can't go for home runs. The chances of you hitting a home run are going to be very, very slim. If you stick with the base hits, they add up faster, and you'll do a lot better. Holding for home runs, you'll probably get 1 out of 20 plays, versus if you take the 50 cents to $1 to $2 plays, you'll nail them about 90% of the time, and those add up really, really fast. So yeah. Anyways, the last play I took, actually no, I took 2 more. I took calls at 222, which is rate. I could see why I didn't grab it there. Why didn't I grab it there? 222. Grabbed it right here, right off the 20 EMA and the VWAP bounce. I grabbed the no, 222. No, I grabbed puts, not calls. Okay, I grabbed puts, so I must have grabbed it right here. Yeah, okay, this is where I grabbed it. For some reason I was thinking I grabbed calls, but no, I can see why I grabbed it here. Popped up, rejected higher day, came back down, popped up a little bit, retesting this area. Then when it got below the 200 EMA or below the 294.75 area, this is where I grabbed puts. I grabbed the 39.55 puts at 750, and they went from 750 to 930 in that little play right there. And then I went and switched to calls at 303, which is right here. I remember grabbing this because it went down to VWAP, started to bounce a little bit, but right when it got over the 394.90 area, that's where I grabbed the 39.50 calls at 650, and then it dumped. Then I ended up averaging more at $4, making my average I bought more at $4, making my average at 525. And it popped up, and it looked like it was going to take off, and it didn't. It dropped back down, and I ended up just getting out at 220 for a loss. So not a good end of the day play. I really thought, I was looking at the cup and handle play. I kind of got it prematurely, so that's my mistake. Or you can even say inverted head and shoulders. You can see the left here, the head, and the right shoulder. But I was actually looking at the cup and handle. They got the cup, and you got the handle. I probably should have waited for 395.50 area for me to grab it, but I got kind of jumpy on it, thinking if I grabbed it right here, if it broke over these candles right here, maybe I'd get a bigger run and bigger play, and I just didn't work out. So it is what it is. So on Tuesday, didn't do that good. 2 wins, 2 losses. Traded Ears Room on Tuesday. SPY puts into 396. Which is right here, this low. It popped up, and right when it got below the 396, I grabbed it right at the, as soon as it broke, I didn't wait to 10 minutes out. I grabbed the 39.55 puts at $8, and they went from $8 to 11.10 on that drop right there. Usually I wait, the first 10-minute candle out, but if the put to call ratio is high or low, I will ignore that and just go with my gut and take it at opening, because sometimes what happens is SPY will just pop or dump and won't look back, and if you don't grab it the first 10-minute candle, you're chasing $2 or $3 already on opening candle. And to me, when an opening candle's already ranged $2 or $3 on SPY, to me that seems very, very risky for continuation. So I don't like doing that. But if the range, if the area of breakout or the level I'm looking at is fairly close, and the put to call ratio is in my favor in the direction I'm looking at, I will take it right out of the bell. So I did do that. So then I switched to calls at 10:02, which is right here. It dropped down bounced off the 200 EMA, went straight through VWAP 200 EMA, and got back to higher day really quickly. And that's when I switched over to calls. I grabbed the 39.80 calls at 650, and then went from 650 to 1040 in that push right there. So then I decided to switch to puts, which was right at 1138, which is right here. You got all these candles right here all clustered together. They're getting smaller and smaller, but they're staying above the 397.20. As soon as you got it below it, that's where I took it. I took the 39.70 puts at 650. I think I dumped some when it dropped a little bit, but not all, thinking we were going to get a massive dump on the VWAP, and we didn't. So I ended up taking a loss on that because it just raged. Then I took puts again at 137, which is right here. Why did I take it right here? 137, 398. Let me get the day right. Yeah, I can see why I grabbed it right in here. I mean, you look at the hourly, blow it up more. 398 is right here. And you can see this area, 398, 399 area is pretty substantial. So when it's struggling in this area, this is where I ended up grabbing it. Plus you had a huge little pop, so I thought we were going to pull back some, but no. I grabbed the 39.90 puts at 750, right at 137, right in this candle. And it started the chop. Looked like it had broke out a little bit for a fake breakout. Then it came down. I thought, okay, we're going to get it right here. Then it just ripped. And I thought I had it here. I wasn't too worried about the breakout because we didn't have much range in the candle. Then it quickly got stomped on when it broke out. So I thought for sure after this harsh rejection right here, we were going to break that 398 level and just dump to VWAP. But it didn't. It just kept going. It just volume was light, a lot of manipulation. That's the thing. One of the things that's tough about short weeks is that volume is really light, especially on Thanksgiving week, because most people are gone Wednesday. They take Thursday and Friday off, and a lot of the big hedge funds take the whole week off. So I mean, that's why there's no volume. When there's no volume, the market's the easiest to manipulate, and that's why sometimes you see these crazy moves like this when no one's looking, because I've seen it in the past. Even though volume's light, that market makers know this, and it's the easiest to manipulate when there's nothing really holding it down. So yeah, that's why I just thought we were going to dump and just got raging more. So that was a loss number, 3 for the week. Then FOMC day, I didn't trade until FOMC. I probably should have. I thought I was looking at this and I didn't grab it. I just ignored it. Lately, FOMC has been nothing but a chop fast that I've been kind of ignoring all the plays before it, but there's been a couple moves that I could have played. I could have played the breakout. I could have played the drop right here, but it is what it is. So I just waited. I mean, short week. It was not doing that great for the week. I don't want to take any losses. That's one other reason why I don't like trading before FOMC, is that if I take a couple losses, I'm very reluctant to take more during FOMC. I'd rather not play anything and save the plays for FOMC, because from FOMC afterwards, that's where the volatility is, and that's where you make the most money. And anything before that really doesn't matter to me. I don't really care, especially on days where there's no Powell, because IV is very, very low. And when Powell speaks, just lately, I've had to play a 100-point spread, and I don't like that. And that way, the moves really aren't that big. But when FOMC is on days where there's no Powell, it's just pretty much a minutes release, rehash that you can get at the money for really, really cheap. And small movements, $1 or $2 in either direction, will double them. And that's what ended up happening. And that's where you make the most money. It's on days like that. So the FOMC play, I took SPX 4005 puts at 660, and I took 40.25 calls at 680. Now, when it dumped, the first move is usually the wrong one. And lately, almost every FOMC, almost all year long, has been raging. It either pops it drops a tiny bit, or not at all. Lately, some of the times it didn't drop at all. I just raged completely and didn't look back. But when it dropped a little bit, this is where I sold the puts. They went from $6.60 to $10 on that drop right there. Then they raged. Like I said, FOMC has just been spiking. and held the calls, and the calls went from 680 to 1380, so almost 100% play on that. Actually, almost 100, about 100% play on that on the calls. And so, like I said, FOMC has just been going straight up after the announcement, and the drop has been next to nothing, and that's why when the puts went red, I went green. I took it, and then it popped like I thought, and it just had a nice FOMC play. Then I took puts again at 331, which is rate 331 right here. I didn't take it here. Well, I think I did in the challenge, but I don't cover the challenge plays in the video recap. So, but it came up to RCT. It looked like rejected it 1, 2, 3, 4, 5 times. So when it got underneath the 402 level, this is where I took the 40-30 puts at 570, and they went from 570 to 710 on that drop. So just 2 plays, the FOMC play and the end of the day play. Good day. Played what I normally, the size I normally do, and did really well. Now on Friday, I did not do too well. Friday, just like I said, half a day, and the market just chopped and didn't really do anything. So trade ideas room on Friday. Amazon calls over 94.16, spot puts under 401. 401 was down here. Pretty far, but I took puts right at 935. I'm not quite sure why I did that. I mean, 401's down here, it's downtrending, and it popped up. Only thing I can think of is that once it got below, it opened up here, and I was thinking that maybe if it got below this candle right here, that it would dump. Because I had the 40-20 puts at $7. Remember, I'm playing small all week except for Wednesday, so I'm not going to take any big losses on a short week. I know short weeks aren't my greatest weeks, so knowing that, this is when you need to know your weaknesses, and you either just embrace them or end up taking some losses. And me, I know what short weeks are my Achilles heel, and I just play accordingly. But I should not have taken this play. No reason for me to take it except for I thought maybe it was going to dump, but I didn't. I should have waited the first 2-minute candle. If I waited the first 2-minute candle, I would have definitely not have taken that loss. In fact, I would have taken calls, which I did take calls at 11:37, which is right. Where are you? 11:37. I took it down here. Took it down here for some reason, so I probably got it through VWAP. Right in through here, I got it at the 4-2-30 area. I grabbed the 40-25 calls at 580, and they went from 580 to 740, and that pop right there. Then I took puts again at 12.25, which is right here. 12.25, yeah. So I grabbed right here, got this move. Then when it came back down, it pushed through VWAP again over the 402.50. That's where I grabbed calls again, the same ones, of 40-25 calls at 590. And it dropped, and it came back up. Looked like it was going to break. Then it dropped, and it looked like it was going to break again. It could not get over this 402.50 area, and they ended up going in the money, which I just ended up dumping, so I didn't get exercised. But the SPX gets exercised as cash, so, but I didn't even have to get out of it, but I just decided to. So yeah, it was very, very annoying that I caught it here and dropped and looked like it was going to go, and it dropped and it looked like it was going to go again and dropped, and I thought, okay, end of the day pop, we're going to rage to 404, 403.50, 403.50, and it didn't. It just stayed in its little tight range. It was very, very annoying. So that was the day, and that was the weekly recap. I hope this has helped, and thanks for watching.